At issue this Sunday morning, affordability. It was a top concern for voters in both 2024 and 2025.
I want to say hello, Pennsylvania, and I'm thrilled to be back.
The president came to Pennsylvania this past week to tout his economic record.
They caused the high prices, and we're bringing them down.
Ahead, my exclusive interview with the Treasury Secretary and why he says the president's policies will bring prices down.
So I think we're on a very good track on inflation.
Plus, a congressional Democrat from our area on Pennsylvania's economy and what it would take to get a deal on health care.
I think there's a number of things that could be done to bring prices down.
Then, the role of the Fed, what this past week's rate cut means for your bank account.
NBC10 at Issue starts now.
I'm Lauren Mayk. Welcome to NBC10 at Issue. As I was out on the campaign trail talking to voters over the past 2 years, the cost of living, housing, groceries is something voters brought up over and over again. A new poll found nearly half of Americans say they find it difficult to afford everyday essentials. An NBC News poll this fall showed 66% of Americans who responded said the administration has fallen short of its expectations in handling inflation and the cost of living. I covered the president's rally this past week in Mount Pocono. Before President Trump spoke, I talked to his Treasury Secretary Scott Bessent in an exclusive TV interview.
So President Trump is speaking here. The president recently did an interview. He was asked how the economy was, to grade the economy. He gave it an A+ and then some additional pluses. Why do you think all Americans are not feeling that A+++?
Well, look, I think Americans are going to feel it. And everything we've done in the past year is setting the table for a great 2026. And we inherited a mess. You had to stabilize costs. Real wages are up. You know, I call it, I'm going to talk about it in my speech tonight, the 3 I's that cause the problems we've seen. Immigration, interest rates, and inflation. Immigration, the mass unfettered immigration, 10, 20 million people coming across the border, push down working wages, and cause housing prices to go up, rental prices to go up, caused a scarcity. President Trump has closed the border. 2 million people have gone home, so check on immigration. Bond market had the best year it's had since 2020. Interest rates are down, mortgage rates are down. We're starting to see life in the housing market, and rental rates are down about 5%. I expect they'll be down 10 or 15 from the peak. And then 3, inflation, we're working on that. The energy prices are down. Gasoline nationally is now below $3 a gallon. It's below $2 in a couple of states. So I think we're on a very good track on inflation. And I'm also the IRS commissioner as well as the Treasury Secretary. And I can see that the president's signature initiatives in the One Big Beautiful Bill, and I tell you, he fought harder than anyone for these. No tax on tips, no tax on the overtime, no tax on Social Security, auto deductibility. That the bill was passed in July. Working Americans didn't change their withholding, so they're going to be getting very large refunds in the first quarter. So I think we're going to see $150 billion of refunds, which could be between $1,000, $2,000 per household. Then they'll change their withholding, and they'll get a real increase in their wages. So I think 2026 is going to be a very good year.
Let me ask you something else about 2026 that could affect people's budgets, and that is the cost of their health insurance. Does the administration have a plan to lower health insurance costs, or at least keep them from going up, because that deadline is fast approaching for the Obamacare subsidies going away?
Well, one thing we know is the Affordable Care Act was a lie, and the Democrats have done nothing on this. We've seen the rates go through the roof, and President Trump wants to get money back to the people. There are several Republican plans that are under consideration, and they will all be better than what the Democrats have done, with this patchwork and the subsidies.
Why haven't we seen one come out of the administration and say, this is the plan, this is the one we want to do?
Sorry, that we are working hard on it, and I think you're going to see it soon.
What do you think is holding things up? What's causing the delay? I know you talked a number of weeks ago that we were going to see one soon.
Yeah, I think what's holding it up is there are a lot of opinions, and the insurance companies where the Democrats send all the money have a lot of lobbyists. So when you want to pull the money away from the insurance companies, give it to the people, you're met with a lot of resistance.
I know that one of the things the administration has done recently is some funding, some money for farmers to help them out. When you look also at different groups that may have been affected in one way or another by the tariffs the administration has put in, are there plans to maybe reach out and help any of those other groups as well?
Well, let's be clear on one thing, that it wasn't the tariffs that hurt the farmers. It was the Chinese government intentionally used our great American farmers as pawns in the tariff negotiations. So the farmers were not hurt by
the tariffs were a part of all of that.
No, the Chinese decided to cut back their soybean purchases to zero and harm our farmers. And President Trump, we had a great event in the cabinet room and in the Oval yesterday with 12 of our farmers to announce almost $12 billion in aid to the farmers. But more importantly, President Trump, when he was with President Xi in South Korea last month, negotiated 87.5 million metric tons of soybean purchases for the next 3.5 years. So our farmers are not going to be used as pawns again.
One of the other things that we have heard talk about potentially for consumers is some sort of stimulus check, potentially like a $2,000 check, maybe even coming from tariff funds. Is that in the works for 2026?
Well, look, we have the tariff case before the Supreme Court, and the American people will be the big loser if the SCOTUS rules against the administration for two reasons. One, that we actually shrank the deficit this year. Wasn't much, but it was smaller than what we were left with under Biden. Everyone was predicting a $2 trillion deficit. It was about 1.78, so the deficit contracted. But we're going to have to wait and see what the Supreme Court does. The other thing with this...
So it would depend on, so any kind of stimulus checks would depend on the outcome of that Supreme Court case?
Well, it's going to depend on that. And also, it hurts our national security because President Trump has effectively used tariffs to negotiate. He put a 20% fentanyl tariff on China. We have hundreds of thousands of Americans dying every year. The precursor chemicals from fentanyl come into Canada, come into Mexico. The product gets shipped into the U.S. And thanks to President Trump's tariffs, the Chinese have agreed to work much more closely with our law enforcement to ban the precursor chemicals.
Before I let you go, you talked a little bit about what we can expect to see in 2026 in terms of money in people's pockets. As we're standing here, I'm looking at what's on stage. It says bigger paychecks. It also says lower prices for folks who are going to the grocery store and say, it's still squeezing me. It's still too high for me. What are the next steps from the administration to bring those costs down?
Well, again, the Democrats had scarcity, affordability.
But what are you going to do?
Yeah, right. Well, that's the last part. We get to prosperity by higher paychecks, and there's some things we can control, and some we can't. The president got in office, and egg prices were through the roof. Unfortunately, beef is very idiosyncratic. There's this blight down in Mexico that we're having trouble with. But what we are doing is, as I said, energy prices are going down. And in my 40 years in the investment business, when energy prices go down, that leads everything. So even at the grocery store, a huge part of grocery prices are the transport to get the groceries there. So I think once energy goes down, everything else is going to go down. And the other thing that Americans are going to see that we're deregulating, whether it's President was telling the farmers yesterday, we're deregulating their tractors. We're deregulating. The president signed something to get rid of these Cap A standards on cars, which increased Americans' gasoline bills. So we've got a whole range of things that we're doing, but a big part of it is going to be the increase in wages. I think we're going to see a Main Street wage boom next year.
Mr. Secretary, thanks so much for your time.
When we return, how are Democrats responding and what can Congress agree to on health care? Straight ahead, my conversation with Democratic Congresswoman Mary Gay Scanlon.
This is NBC10 at Issue.
We're back now on NBC10 at Issue with more on the topic that has been dominating the political conversation in both parties, affordability. Well, before the break, I brought you my interview with a member of President Trump's cabinet, U.S. Treasury Secretary Scott Bessent. Well, now let's check in with a member of Congress from our area. Congresswoman Mary Gay Scanlon is a Democrat whose district covers Delaware County and parts of Chester and Montgomery counties, as well as part of South Philadelphia. Welcome back to NBC10 at Issue. Great to see you, Congresswoman.
Thanks for having me.
So President Trump was in Pennsylvania this week. You represent a district in Pennsylvania. How would you describe the economy in Pennsylvania right now?
Well, what I'm hearing from my constituents is they are squeezed. They are struggling to afford particularly health care because of the White House and the congressional Republicans refusing to engage on the issue of extending the ACA tax credits. That's probably number one, but we're hearing it across the board with respect to, prices of everything from groceries to Christmas presents having gone up largely because of inflation, which has not been brought under control and in fact has been exacerbated by tariffs. We're hearing about energy price spikes. So folks do not agree with the president that affordability is a hoax or that he deserves an A+++ on the economy because they're feeling it in their pocketbooks.
So prices are something that we heard about during President Biden's term and now President Trump's term. Are there things that you think could help bring costs down that neither administration has tried?
I think there's a number of things that could be done to bring prices down. I mean, number one would be not engaging in trade wars across the globe. That is something that this administration uniquely has engaged in, and it's hurting folks in our region. We saw as a result of the pandemic in 2021, that prices across the globe went up, that supply chains were disrupted, et cetera. So that's a problem. We had seen under the last administration with the Inflation Reduction Act, which Congress passed, it was adopting additional environmental and energy measures to make sure that we're supporting the energy sources of the present and future by expanding our access to energy. We've seen this administration double down and really put their thumb on the scale to support oil and gas while gutting development of solar and wind and other sustainable energy sources. And we're seeing the prices of energy going up as a result.
I want to ask you about health care. You mentioned that those Affordable Care Act subsidies are due to expire if they are not extended, and that could squeeze people's budgets even more. We are seeing a number of proposals come out of Washington regarding health care, including a discharge petition from Republican Congressman Brian Fitzpatrick. Do you see the possibility of support consolidating behind that or any other bipartisan solution?
There are now 2 or 3 discharge petitions in the House. First of all, Democrats have been raising the alarm on this since this summer and before. We had that one big beautiful bill that was rammed through on party lines this summer where the White House and congressional Republicans insisted on making permanent tax cuts for billionaires, but refused to address the tax credit issues for the Affordable Care Act. Now we're seeing in just a few days, those tax credits will expire, and we're hearing from constituents that they're going to see their bills go up by thousands of dollars every month. So it's really putting a squeeze on people. If either of these new discharge petitions were to go through, the timing would take us already into next year. So they won't address the issue before it becomes a full-blown crisis. Every Democrat in the House has signed on to a discharge petition to just extend the tax credits. Our Republican colleagues are really struggling because they lack agreement. They're in the majority, but they can't reach agreement on how to move forward. And they've got a significant component of their party that wants to do away with the Affordable Care Act entirely, despite the fact that they would leave so many Americans high and dry without coverage.
Ultimately, though, are you willing to support something that maybe makes some changes to who is able to get those subsidies, those tax credits, that maybe adjusts that a little bit in order to extend them for at least some people or the people who may need them the most?
Absolutely. We have been asking for a real negotiation for ages, but what we see on the other side is continued chaos. They do not have a proposal that they can advance. And so, until they get serious about trying to deal with this, it has been 15 years since the Affordable Care Act was passed, and they keep telling us they're going to come up with a plan, and they don't have a better alternative. So at this point, we're kind of stuck. I mean, the tax credits are expiring at the end of this month, much less the end of this year. We're already hearing that it's caused chaos in the market, and not just for folks who get their coverage through the Affordable Care Act, but everyone else, because all of this insurance is based on risk and who has coverage and who doesn't, with millions of people opting out of having any coverage because they can't afford it anymore. Everyone's rates are going up.
What do you think of President Trump's preferred approach, giving money directly to individuals to buy insurance plans?
It's not a solution. We've heard this kind of rhetoric before. They still have to buy insurance plans, and without the guardrails.
Why couldn't it be a solution?
I'm sorry, without the guardrails.
Why couldn't it be? Why couldn't it be a solution?
Because the coverage will be even more unaffordable. I mean, the Affordable Care Act brought us things like providing coverage for young adults, folks up to 26 years old, providing coverage for pre-existing conditions. If you just leave it to an open marketplace, a lot of people will be uninsured because their premiums will be so high.
Rate cut. The Fed this past week voted to lower its influential interest rate. Ahead, a local economist tells us what it means for anyone with a credit card or looking to buy a home.
This is NBC10 at Issue.
On Wednesday, the Federal Reserve cut interest rates by 1/4 point. It is the third rate cut this year. In making the rate cut, the Fed had to balance inflation with a labor market that appears to have weakened in recent months. And for more on what this cut means for your wallet, we're joined by an economist. Andrew Davis is the Director of Macroeconomics Research at Bryn Mawr Trust Advisors. Welcome. Thanks for joining us.
Thanks for having me.
Let's start just with your headline. How would you describe this at the dinner table, why this is important?
Yeah, so I think the big shift that we saw on Wednesday was that the Fed now acknowledged that they're close to about the right policy rate. So what that means is probably not too much movement from here, maybe incremental adjustments. And then the bigger change was really to their growth forecast. They see stronger growth for the economy, which is great, and they see lower inflation. So really a productivity story underneath, which we think is great for investors, great for the economy overall.
Let's talk about what this means for individuals, maybe in different situations. We think when we talk about interest rates, we often think about mortgages and what people are paying to borrow money. If you are looking for a home, if you've been maybe holding off because interest rates are higher than you want them to be, how should you be looking at this rate cut? Is this a good time maybe for you to move?
Yeah, well, financial advisor advice, we always want to say that the payment makes sense for your lifestyle, not just in the future, but today. That's important. But I think the other thing to pull on here is because they signaled that they're about close to where they would deem neutral policy, that probably doesn't mean too much further reductions in rates. So we're not looking at recessionary risks where they're frantically cutting, but a more predictable Fed, maybe one that is able to kind of forward guide the market, should allow mortgage rates to come down over time. It's not going to be immediate. It's not going to be one for one. And maybe it's not quite the relief in 2026 that people are hoping for. But it does mean kind of moving lower over time, I think, would be the expectation.
We heard President Trump recently in an interview say that there's a litmus test for him in choosing a new Fed chair, that they have to be willing to bring interest rates down immediately. So how do people take that? Does that mean, oh, I should hold off because, gosh, they're going to be coming down a lot more?
Yeah, I think there was a lot of uncertainty with everything going on and what had been announced. But at the end of the day, the way we view the Fed is it really is a consensus institution.
Not just one guy.
Yeah, and what we mean by that is the committee's there. There's good checks and balances. There's separation of church and state, if you will. And so ultimately, we think that whoever gets put in there is going to make decisions based on economic data. And that's exactly what Powell told us on Wednesday. They're watching the data for their next move, which is why we don't think that they're going to be in any rush to continue to cut. And maybe it's kind of just a drift lower. Maybe they get 2 cuts in, something like that in 2026.
From where things stand right now, what does this mean for folks who are maybe not thinking about buying things, but have been, taking advantage of saving? Mm-hmm. If they've been able to do that, does this sort of, should they be shifting things at all if rates are coming down? Yeah, well, I think you always want to look at your total picture. It goes without saying. But with rates drifting down at the front end, there's still attractive yields that you can find elsewhere, whether it's stable, fixed income, bond type products. But there is going to be some changing, some shifting going on as the lower end of the interest rate kind of drifts lower over time. All right, we'll have to leave the conversation there. Andrew Davis, Director of Macroeconomics Research at Bryn Mawr Trust Advisors. Thanks for being here. Thanks for having me.
This is NBC 10 at Issue.
Before we wrap up this edition of NBC 10 at Issue, a reminder, you can see more of my interviews with public officials, candidates, political insiders, and voters by subscribing to my Battleground Politics podcast. Episodes are streaming now on NBC10.com, the NBC10 app, and our NBC Philadelphia YouTube page. Or you can listen while on the go, wherever you get your podcasts. That does it for this edition of NBC 10 at Issue. Thanks for joining us. Have a great day.